Welcome back. Well, let's welcome our first corporate on our radar, Dodla Dairy. Well, their gross margins witnessed a contraction in Q1, and that seems to have disappointed the street, and that's what impacted their profitability as well. Well, let's discuss more on the company's performance and the way ahead. We're joined by Mr. Sunil Reddy, the Managing Director at Dodla Dairy. Good morning, Mr. Reddy, and good to see you. And as always, thanks a lot for speaking to us here on CNBC-TV18. Well, the sore point in the numbers was the gross margins did contract. But as you've mentioned, it was impacted by seasonal impact. There was inventory liquidation as well. What is the outlook on margins from year on, if you could help us out with that number? And for the year, what kind of revenue growth should we pencil in?
Revenue growth, as you've seen currently, even in the first quarter, was at around 10%, a little more than 10%. We are looking forward to keeping up the revenue growth between the 10 and 15%. So we should be around 12 to 13% of revenue growth. That is not considering our acquisition that we have done. Regarding the margin profile that we look, the first quarter has been a tough quarter because procurement prices did go up and the commensurate sale prices didn't go up, and due to rains also, value-added products like curd, lassi, buttermilk, and all those things were not there, which were normally giving us a very high return. And also, if you have to look at it, our previous year, the same quarter, was a phenomenally large quarter for us. We had done extremely well because that was the first time we had actually moved from being a net seller of a commodity rather than a net buyer. Keeping these in view and looking forward, I think we'll maintain the similar numbers like how we have always been, keeping that top line growth at that between 10 and 15%, and also keeping the bottom line growth in the high single digits between 8 to 10%.
EBITDA margins is 8 to 10%, is that correct?
Yes, EBITDA margins will be 8 to 10%.
And you're talking about organic growth between the 12-13% vicinity, or 10 to 15% if you want to have a wider horizon.
Yes.
But inorganic growth will contribute to how much? If you could give us a number, absolute terms, what kind of revenues are you looking at?
We have just taken over Osam Foods that they had a number of 280 crores last year. So this year we won't get the first 4 months of operations, and then we will be adding the other months of operation, the remaining 8 months. We should at least conservatively look at it between 150 to 200 crores.
Okay, so the acquisition will then also add in. Morning, Mr. Reddy. You said that the commensurate increase in the customer level prices did not happen, which is why the margins were under pressure. What is the outlook? I mean, is there a lot of competition in the market, which is why prices are not going up? Will they go up? Maybe not for milk, for some of your other value-added products. Just give us some idea of the market, the competitive intensity, your market share, and the pricing strategy.
So basically, the market intensity has remained the same. It's always been the cooperatives versus the private sector, where the cooperatives have a lower pricing and the private sector has a little higher pricing, as we call ourselves a mass premium brand. The only thing that we faced was the procurement prices, which were going up. They went up a little more than what the price increases we had taken. We did take a price increase of a smaller portion because we are anticipating the procurement to come down again, and rightfully so. It has come down in July, and it's starting to show better results for us already. So continuing this price trend, which will, if it comes down by another rupee or so, we don't have to increase the selling prices. So that was the intention of the not increasing the selling prices totally to the extent, because we were waiting and watching to see how much the procurement prices would come down.
So just on the market share point as well, within the southern market and of course within the state, when you talk about private sector players, what is your market share at present?
We should be around 6 to 7% market share.
And do you see that increasing?
Yes, we've been able to keep the growth going. It is, but although it will be marginally, because it will be 6 to 6.5% is what we see the market share growing, not tremendous growth in market share.
Mr. Reddy, hi, morning, Prashant here. What is the share of what you describe as value-added products, sir, as a percentage of total annual revenues now?
Now it's around 36%, Prashant, sir.
Okay, and where can this head to? I mean, what's your sense?
This should go up by 1-2%, not much more than that, because it's basically like how our plate profile is as what we eat at home. I don't think there's been much of change. Yes, we have improved our value-added sales in products like paneer, which southern India is beginning to consume a little more. And we are hopeful that other products like paneer, which are moving up, will add to the growth of that 1-2%. Curd will remain static where it is because of the weather is already, the prime months of curd, where curd sales would have been the highest, has not taken off as much. So curd would be where it is, and it will remain at the 36-37% for the current year.
So you'll base 1-2% basically at an absolute level from here. I mean, basically that's where it should consolidate and remain essentially, right?
Yes.
Okay, and on both sides, on value added as a aggregate, can you, if it remains at this 36-38% odd range, what are margins and what can you do to increase margins here? What's your sense?
Basically, like I said, it's always been a play between procurement pricing and the consolidated pricing of our sales product mix revenue. This time the growth you see in revenue, the product mix of not having higher value products like curd has seen the contraction in the gross.
No, I'm saying, Mr. Reddy, fundamentally on a slightly longer term basis, can you do some, I don't know, rebranding, launch some other products, kind of sort of, move into another, which allows you to premiumize and charge more for what you sell across your value-added portfolio?
We are doing that. So right now we have increased our advertisement spends. We have got much more depth in advertisement that we are doing now. Even for from the EBITDA margin contraction, if you see our two major drivers other than the gross margin contraction has also been our increase in ad spend and increase in the increments in terms of the salaries and wages, because we've also hired a lot more people now to make sure that we take it forward into growing our market share and increasing our depth.
Okay, very quickly, what is your current procurement capacity? And you had mentioned that it was likely to move up as well on a per day basis. So update us on that front.
Currently, we are at around 18 lakh litres per day procurement that we are doing, and we're looking at moving it up to 19 to 20 lakhs in the short term. That is where we'll come to. That is the outlook that we have.
Okay. All right, Mr. Reddy, we'll leave it on that note. Thank you for joining in. Good conversation, gives us a quick perspective on the business as well. Thanks for being with us. That's Dodla Dairy. Stock down sharply because of that compression in margins, but the management says that it should get better from here on. 8 to 10% is the range for EBITDA margins going forward into the year. Well, with that, let's move on and say hello to